our last presentation on social enterprises. So Farrukh, why don't you come on in and tell us a little bit about Defynance? And you are muted.
All right. Can you guys see my screen?
We can.
All right, fantastic. So thank you, Eric and Lily and everybody else who puts this together. Really appreciate it. My name is Farrukh Siddiqui. I'm the founder and CEO of Defynance, and we are tackling the student debt crisis. Now, I can talk to you about the more than $1.6 trillion student debt crisis that's growing 10% annually. In a couple of years, will be over $2 trillion. It's already the second largest consumer debt, more than auto loans and credit cards. But at the end of the day, it's all about the people, right? So in this case, it's all about the 45 million people that have student loans that are impacted by the student debt crisis. And unbelievably, over 90% of them have suffered severe anxiety due to student debt, and more than 50% have suffered depression. But let's look at some of the real stories. We have Naomi, who's a immigrant, and she's having difficulty navigating the red tape of student debt. For example, some immigrants take student debt without recognizing that it's actually debt because they think it's a financial aid package that's being offered to them. Then we have somebody like Sarah who's wonders if she can even get her kids into a debt-free education anymore. And then we have Arthur, who's earning over $125,000, but living paycheck to paycheck. And then Jack, who funded his kids' education with Parent Plus loans, but now, can't even go on a date and spend $100 to go on a date. So these are the problems that are impacting student debt. The reality is student debt is pervasive and runs across the income and demographic spectrum. Now, our solution empowers financial freedom. We refinance student loans with debt-free income share agreements, or ISAs. And an ISA is exactly what it sounds like. It is an agreement to share a fixed percentage of income for a set period of time. For example, we refinanced our first customer's student loans by paying them off, and now she has affordable payments that adjust with income and is able to pursue her dream of home ownership. We've already built our MVP and prototype of our ISA marketplace. As you can see, we have three components. We have our ISA marketplace. We also have a fund where investors can invest. We use that capital to refinance student loans. And as people are making their income share payments, those payments go back to investors for their return. And then we also have a resources marketplace, which you can see a sample of on the right, where we actually help people find jobs through career resources, wellness resources to tackle depression, anxiety, and other issues like entrepreneurship, fixing their credit, and other things. So we have a comprehensive offering that addresses all of these things. As far as market size, if we just focus on the most expensive student loans, the private student loans, the graduate plus loans that graduate students take out, and the parent plus loans that parents take out, the serviceable market is $310 billion. And we earn revenue in multiple ways. We get upfront processing fees and investor sales charge, and recurring servicing and fund management fees. And now we're raising capital for a 24-month runway to establish product market fit, automate our processes and workflows, and build proprietary platform technology. We have outlined several key milestones over these next 2-year period. We want to get to 1,500 customers, meaning we want to take at least 1,500 people out of student debt, earn $2 million in revenue, and attract 10,000 people to our marketplace so we can help them find jobs, and etc. Our team of engineering and marketing experts are actively supported by Techstars. Techstars is a global, one of the best accelerators in the world. We were just accepted into the program. In fact, today is day 2. So we're actually kind of going through it right now. And we're also supported by 2 leading incubators, ATDC out of Atlanta and the Embark Collective. Thank you so much for giving me the opportunity to talk about Defynance, and we'll love to answer any questions.
Thanks, Farrukh. And the questions are already coming in. So ISAs are, I'm reading here, usually for students entering school. If you use an ISA to allow a post-grad to refinance a loan, how do you prevent adverse selection? For example, someone who is about to lose their job, if they don't have a job, they don't have to pay you back. Can you walk us through kind of, I guess, your risk mitigation strategies?
Absolutely. Great question. One of the reasons for focusing on refinancing student loans is to avoid adverse selection and to mitigate risk. Because unlike giving an ISA to a student, where you have to deal with the uncertainties of if that person graduates, if their degree actually translates to the job that they were looking for, if they're entering into a bad economy, how long does it take them to find a job? All those uncertainties are eliminated because we refinance student loans. So we're only going to be funding people that have a job that we can document and verify with at least $30,000 in income. Now, of course, later on, if they lose their job, then part of the ISA structure will protect them because we won't take advantage of them. We will pause their payments and help them find a job through our resources marketplace. And then we also can deploy data-driven underwriting. We have an algorithm that we've built that's able to price income share agreements so they're competitive for our customers and provide a return to our investors, and utilizing data-driven underwriting to mitigate risk.
Wow. I guess you've heard that question before. Thanks, Farrukh. So how are you servicing your ISAs, in-house or with an external partner? Good question.
Yeah, in the beginning, we will be servicing in-house because we have to establish the standards of servicing. We want to make sure that we're always going to focus on being socially responsible and giving the right experience, the best experience to our customers. As we learn from this experience and we build our servicing standards, then we may outsource components of servicing to outside providers in the future.
Could you, because this is too close to me, too personal as a law school graduate for me to go into a personal example, but can you tell us a little bit about like the revenue model and like what types of people are you suspecting would be interested in participating in these ISAs?
Yeah, we've already received over 80 applications, and that they've kind of come from a gamut of different types of people. With I think about 85% have at least a bachelor's degree or more. There are lawyers who've applied for the program, as well as doctors, as well as engineers, accountants, and so all kinds of different folks. We have to work on our product market fit. We have to figure out the right personas that make sense for us over time, and that's one of the big things we're working on during Techstars and beyond. But really, Eric, if I want to summarize it, we're looking for people with stable, growing income streams with hopefully limited unemployment potential. That's sort of our sweet spot. That's the kind of people we want to fund. But as our fund grows over time, then we'll have the ability to expand and help more and more people.
I think that's important. There are some models out there that take like some, kind of like really calculated risks up front, and that with the idea of expanding that risk profile ongoing. And it sounds like that's a big piece of how you plan to go forward. Perfect. And we have more and more questions coming in, so I won't dwell on that too much. So when you set the ISA terms, and this is a question coming in from the attendees, thank you so much for all the participation, by the way. Very interactive. This is the way I love it. So when you set the terms for the ISA, do you try to match the monthly repayments? For example, $500 a month per loan, or how would that be refinanced as an ISA in terms of monthly payment?
Yeah, so when someone applies for the ISA, we give them multiple quotes. We match the length of the ISA with the income share percentage. So a 5-year ISA will have a certain income share percentage, a 7-year, 10-year, etc. That is determined by an algorithm where we're trying to balance the return to investors along with a very competitive pricing. Our target is going to be the higher end of the student loan spectrum. So the private student loans and the graduate plus and parent plus loans, where interest rates tend to be 7% or higher for those types of loans. And those are the ones that are unsubsidized with minimum consumer protections, where the ISA really stands out. And that's where we want to initially build our traction, and then over time expand the program into more and more areas. So the pricing is determined by the individual risk factors every candidate brings. So we would look at their current income, what profession they're in, how much work history they have. We also look at credit, but we recognize that young people don't have, the credit score is not fair for younger people. So we don't use a credit score to make decisions. We do track it just to see how our underwriting is performing against it. But we do look at factors like late payments and other factors in the credit history, but do not use credit scores to make decisions.
Super helpful. And
one more thing, we also don't require a cosigner, which is another big benefit for people.
Very important, very important. And then we're going to try to squeeze in these last two questions before we do the closing remarks, but I'm going to go ahead and kind of call it after these two, so we can stick on script. So how is the percentage of income calculated? Okay, 3, fine. All right, I'm going to push over. Three last great questions. How is the percentage of income calculated? Is there a CFA or CPA on the team? Very important.
Yeah, we have been working with a CFA. One of our initial angels was a CFA, is a CFA, and we've been working with CPA as well to fully model out the fund and also to develop the modeling for our pricing structure. But like I said, the pricing is a balance between the return to investors and a competitive pricing for the people that are refinancing student loans. Ultimately, as we learn from our experience, collect more and more data, we'll be able to fine tune the pricing more because we'll learn about actual career trajectories of our customers.
Perfect. And then are you looking to raise operational capital as in paying salaries, et cetera, or are you looking to raise financing capital to pay off the loans that are being refinanced? Good question.
Yeah, the great question. The current net capital campaign is for operational capital for the business, but we also have a capital raise that began recently for the fund itself, where we can use that capital to refinance student loans. That's not going to end. That's a forever process. We always have to raise capital to do that. However, the net capital raise will end at some point, and then we're going to raise more capital after we go through the Techstars program, and I'll talk about that more in the closing remarks.
Perfect. And last one, sneaking in here, does this only apply to college or can it apply to professional development as well? Good question, Danielle.
Yeah, the minimum criteria is someone with at least 30,000 in income. College degree is not required, but if you don't have a college degree, then of course work experience will be a much more heavily factored situation within underwriting. So we're going to need to see more work experience with that, but we are open to anyone that can demonstrate, like I said, stable growing income with limited unemployment risk.
Fantastic. Well, that kind of concludes our regularly scheduled programming, but please do stick around. We're about to do closing remarks. Farrukh, if you don't mind stopping your screen share while I kind of preface this up. As always, this has been recorded and will be uploaded to the Net Capital YouTube account, so do not hesitate to share this liberally. We want to get as much exposure to these founders and their companies as possible. But now we're going to go into our closing remarks with our last few minutes. We're going reverse order, as I mentioned before. So Farrukh, Eric, and then Indian Herald, and then Juan. I'll bring this home. Last prompt here, Farrukh, starting with you. Why should the people that are listening right now, the attendees and future listeners who are watching the recorded version, why should they go to Net Capital right now and invest?
Well, our campaign is ending in 3 days or on Friday. So there's an urgency there as well. You don't have much time left. So definitely this is the time to do it. The team, we have, myself, I'm a little bit older, but the team is very young around me. We are very, very passionate about this problem and we are fully committed. We've drank the social responsibility Kool-Aid. We want to solve this problem big time. And from an experience perspective, my strongest experience is in risk mitigation, credit underwriting. So the stuff that's going to be crucial to our success long-term is what we have. And then we have tremendous support with Techstars. Now, Techstars is a global accelerator program. They've invested in our company. They're our first institutional investor. And because they're invested in the company and we're going to go through their program, we're going to get our valuation raised in the next 3 months. So if you invest, you're going to see a bump up in your valuation right away. We're going to come and raise capital afterwards with a much higher valuation. And Techstars, they have 2,200 companies they've invested in, 32 billion market cap, multiple unicorns. And the most amazing statistics is 86% of their companies are still active or have been acquired. And that's an amazing success rate for Techstars companies. So we feel very strongly that we've gotten great validation from Techstars. And like I said, we're ready to kill it. So come support us and become a part of the solution, solve the student debt crisis.
I'll kill it, Farrukh. And just for anybody who was uncertain, that was sounded like a lot of opinions. Those weren't forward-looking statements. We're not projecting future success here. We're just leaning into the facts there and a little bit of opinion from Farrukh. But we're gonna keep moving. Thank you for that. Techstars is a great organization. We're a fan. We're a partner. Eric, why don't you